thank you everyone for joining. That's right, Chad. You were absolutely right. It is save your tears. Good job. This is congratulations. Apparently, it's on your playlist. So look, you guys see the topic. You've joined digital get down, using tech to forge closer relationships with your members. And so this is the one time where we encourage all of you, take out your phones, take out open up your emails, your Slacks, your LinkedIn's. And if this topic seems like somebody in your office, in your organization, your friend that works somewhere else could benefit from, this is the time to text them the link, email them the link, let them know to join us, be part of the conversation. Because as much as we like to watch recordings, the real magic happens live, right? And you can ask questions, you can engage. If you don't engage, you don't get the answers that you need because you didn't ask the questions that you wanted to ask. So engage. And that's why being live is so critically important. So if you want your friends and some of your coworkers to be on this, join now, send them the link. We're going to get going here. I cannot wait to have this conversation. This is something that we've been working on for a little bit of time to bring to you, and I'm excited to do it today. And so before we get going, you can see the key takeaways. Okay. Again, remember not just the title, but look at the key takeaways. Which one of these are really important to you? If you want to mention it in chat, throw it in chat. We'll make sure to cover it, and remember to be engaged, right? If something stands out, engage, ask questions, make a comment. The more engagement we have, the better the conversation gets. Let's get going. My name is Alex Kutsishin. I'm the co-founder, CEO here at Sales Boomerang, and I have an amazing panel for you today, and the guests are just phenomenal. We have Brian Waldron, CEO over at Dort Financial Credit Union. You want to say hello, Brian?
Hey, good afternoon. I hope you're well.
Fantastic. So thank you for being here, Brian. And then we have Michelle Burke, who's the VP of Mortgage Lending over at Westerra Credit Union. How are you, Michelle?
I'm great. Thanks for having me.
Absolutely. Thanks for being here. And of course, this person needs no introduction, just a drum roll. And we all know who he is. It's Peter Benjamin, president of ACUMA. How are you, Peter?
I'm just fine, Alex. Thanks for having me. Brian, Michelle, good to see you.
Good to see you as well.
So this and the number of attendance keeps going up. So you guys are texting, linking in and doing whatever you're doing because the attendance keeps going. So you guys keep inviting those people. We're going to jump right into this conversation. We are not going to slow roll this. We're going to get right into the heart of this. Okay. So if you end up getting busy and having to take a phone call or be pulled out of the conversation, you are going to get something very valuable in the first two questions that we talk about. So stay tuned. If you stay tuned for the whole thing, you're going to get a lot more value, but we're getting right into the heart of it. We have two of the best from the credit union space on this call with us. And we want to get right to the question that is probably on many of your minds, which is, what goals have you all set for your organization this year as far as it goes to mortgage? I'm going to start with you, Brian, and then Michelle will throw it to you. And Peter, if you want to throw in some thoughts. But what goals have you set for your organization?
Yeah, Alex, thank you for that. It's a great question. And, being the CEO, I have a little bit more of a global view on this question. So it's not just mortgage related, but it's in general, we have a huge focus on lending, and mortgage lending being one of them. So we've sat down and we've kind of discussed with our leadership teams on where do we think this is going to come from. And our focus is primarily on the purchase market and home equity. The refinance boom, rates being 2.5%, 3%, that's kind of ending as we see on the 30-year fixed. However, we do believe that there are still purchase loans out there to get. And of course, everyone has equity in their home at this point, it seems like. So we are really focused on those two products and services and really trying to build up loan demand and loan dollars in those categories.
And so you decided as an organization that the focus is going to be on the equity in people's homes and on the purchase side. And so everyone pay attention, because we're going to unpack that strategy and what Brian and his team are doing to be successful with that strategy. So take some notes. If you didn't, and you're probably like, oh, I maybe had some of that, but watch how Brian and Michelle unpack this topic further. So purchase and equity is the focus. They're not diluting their focus. They're really focused on two things right now. Michelle, what goals have you set?
Those are the same for us as well. Obviously, we want to have loan growth, but in order to achieve that, we're focusing on the relationships and, identifying the untapped opportunities within our credit union. We have 120,000 members, and very few of those percentage-wise have a mortgage. So, in addition to the purchase focus that Brian was talking about, we're working on the relationship piece of it.
Excellent. So again, a slightly different approach to setting goals. Here, Michelle and her team are setting goals around relationship building, knowing that there's a little bit more time in the market. We aren't just, trying to fend off everyone trying to walk into our business, call us, text us, email us, all wanting 2.5% interest rates. So Michelle said, look, this time gives us the ability to build relationships. And so again, listen very carefully, everyone. You listen to the goals that Brian and Michelle just set, and you'll see how timely it is. They're not doing the same things they did yesterday. Okay. They're doing some new things, and they're doing it very purposefully. This is not an accident. It's not an accident that they're leaders, and it's not an accident that they're choosing to do the things that they just described to. So listen to the details as we start to unpack this conversation. You're going to get to hear some of the strategy behind it and how they're executing on it. Peter, anything you want to add to this? Any goals that you want to cover here?
Well, I think that, this is a great question. The reason why I like this question is because, over the past month and a half, since my time really as ACUMA president, I've been out there, talking to a lot of credit unions, and this seems to be an overarching theme is they are either A, reassessing their technology to figure out how they can better serve their members, or find a way to better equip their loan officer, their mortgage team with finding ways to capture more of their member business. The average capture rate for a credit union is around 3%, right?
3%.
And portfolio lending and affordable housing is what credit unions were built on. And so they're trying to leverage that in a rising rate environment. Part of that is retention tools. Part of that is technology and finding a way to really, we'll say, chart the path forward to success.
Love that. Love that. So look, let's go a little further with this. Let's get to the next layer here. So you heard the goals. We have purchase, we have equity, we have purchase, we have relationships, right? So there is a common theme with purchase, obviously, but there's different approaches to it, and there's different philosophies on where the focus should go and how. And so look, how are you both using your tech to achieve or surpass your goals? Michelle, we'll start with you. You mentioned using this time, and the goals you've set this year is about purchase, but even more importantly, relationship building and getting closer to the members and being there for them. So how are you using technology to achieve or surpass these goals?
Well, as an organization, we're implementing enterprise CRM or MRM for members rather than customers. And then as far as mortgage specific, we have implemented Sales Boomerang that went live 3 weeks ago. And we really feel like that's going to help us make that connection to the members at the right time for what they need. And then the next step to that is to pull that all together with a mortgage specific CRM that is built to, go down that member journey for a mortgage and help our loan officers stay on top of those relationships, whether it be referral partners, their members, managing those leads to make sure we're following up timely and that we have consistency throughout. So all of those things have to work together really well to manage those relationships.
So perfect. So let's just dive a little deeper into this. So for everyone that's new to Sales Boomerang, let's just explain for just a minute what Sales Boomerang does. We tell Westerra, we tell Michelle and her team when someone in their database is ready for a loan and what the conversation should be about, how to reach out to the member and how to offer value based on the information we received or you received, Michelle, so that you can accomplish that goal. Remember what Michelle's goal was: relationships and purchase. This is the part that does both. Sales Boomerang helps create the conversation for the relationship, and a lot of the notifications that are being delivered are going to be purchase related. Now, Michelle, has your team, I know it's only been 3 weeks, have you thought about, or have you and your team discussed how to use this to also not just build the relationship with the member, which is key, but also using this to help build the relationship with the agent that also needs to sell homes?
Right, absolutely. So a lot of our alerts that we're receiving, they may be for, having equity, or they might look like they need to cash out. But when we have those conversations, we find out, oh no, we're going to be selling our house and buying something else in 4 months. So now we're working with a qualified buyer for a home purchase, and where that alert may have been for a refinance. And so that's how we're taking those opportunities, and then we can refer those back to our realtor partners and deepen those relationships.
Fantastic, fantastic. So what you're hearing Michelle say is this. She's saying, look, we're giving our loan originators, our advisors, the ability to have relevant conversations with our members. So we're adding value, right? Instead of random calls and what may look like a refi. And look, everyone, just know there's a lot of pivot to purchase opportunities out there. There are people that may be perfectly suited for a cash out, but would rather use that for a move up or a move down purchase. There are people that look like they're ready for a purchase, but the homes in their area are not available. They're better suited to refi and invest back into their house, right? There's a lot of free money in your home right now. You can use that to finish the basement, upgrade your roof, finish get a new water heater. The money is there now. And so these notifications give your team the ability to have these relevant strategic calls rather than transactional calls. Let's go to you, Brian, for just a moment. Your goals were purchase and equity. Talk to us how you're using technology to accomplish or surpass.
Yeah, so one thing that we realize internally is that we have at our disposal an immense amount of data about our members. And so we have gone through and we've looked at anyone who has purchased a home in the last several years, and we took a specific look at the LTV at that home price and purchase price, because obviously we have the appraisal data with that first mortgage. And so we have been reaching out to those members who we believe have equity in their home in order to do that, open an equity line, open a second mortgage in order to fund a new kitchen or a new bathroom, to finally put those projects that they've been putting off for a while, put them in place and start working on that. I think you said it. You just said it very well, Alex. It's free money out there for our members to use and to improve their home, so that when the housing market has a small correction or does slow down, they have maintained that current value and not lost any value because they just sat on it and didn't do anything with it. We think that's immensely important.
And so, Brian, it sounds like, so explain to us, how is this a piece of technology? How is your team finding out the current equity position so that they can call and offer? Are these all the serviced loans that you're talking about, or is this a mixed bag?
Yeah, no. So we service all the loans that we originate, and so even if we sell them, we're still a main servicer. So we've been keeping that data with us. So we're pulling that data directly from our servicing software. Again, we're going back to the original loan date and the LTV there, and we're guesstimating at this point. If it was 3 years ago, we're kind of taking a background approach in our technology and adding about 10% to the value and kind of guesstimating the equity there. And we're sending out a marketing piece that says, we believe you have X amount of equity in your home, and we will help you put it to good use.
Fantastic. And so Brian, you've just opened up the conversation for me to say there's a leg up, right? There's an advantage of having a system that alerts you to that. And instead of guessing, right, getting something that will get it to you and get it to your customer and get it to your originator at the moment that there's value to add. So look, this is the panel that we have here and the conversation that we're having. You can see that Brian can be vulnerable and say, look, we're using technology. In this case, we're not using that advanced technology yet, but we are using some of our own internal systems to identify when somebody might have enough equity for us to offer them value. But this is a chance to upgrade, right? This is a chance to you just heard Michelle talk about it. You heard Peter talk about it. You want to have some insights for your team to be able to have really relevant and hyper-focused conversations. What else are you doing, Brian? That's on the equity side. How are you using technology to support the purchase side of the business and to support your team in having relevant purchase conversations?
Yeah, that's a great question too. And so we are really focused on, much like Michelle, is building those relationships. But our idea is using that technology to to allow our members access to us. So
Yes.
in the application process, if they need help, they can, there's a button they can press that will immediately give them a telephone number to call. And we have mortgage loan originators ready to answer those phones and be prepared to answer questions. I am a firm believer in technology. I love technology personally. And when I use it, there are days I do not want to be contacted. But as we all know, when I want to talk to somebody, I want to talk to somebody now. And so
Yes.
that's what we're putting into place. We're not using the technology so that we can call you right away. We're using the technology so that you have the ability to contact us if you should need us. Otherwise, you can walk through the entire process either online or through your mobile phone. But just know that we educate throughout the process that if you need help, we are here for you.
So you guys just heard Brian say something very interesting, and he's sort of foreshadowing to where this conversation is going. But listen to how he positioned that thought of, we're using technology so that if you want to talk to someone, you can easily find who you need to talk to in the organization. He's removing barriers, right? Making it easy, because as Brian said, there's some times where I don't want to talk to anyone. I just want to use the technology because I know how, I have the time. I don't really know how long somebody's going to keep me on the phone or what they're going to ask me. So you know what? If I can do this using technology, I will. But just like most of us, when we're ready to talk to someone, a human being better be available on the other line, because we're ready to talk to them now, right? We couldn't do it on our own. We're ready for it now. And Brian and team, and you're going to hear a quote from him in just a second. Brian and his team are saying, look, we're using tech to give you the option to do it on your own. But if you don't want to do it on your own, there's somebody here, and we're making it easy for you to find the right person to talk to. Peter, before I move on, anything you want to add here, or Michelle, any insights, thoughts?
No, the only thing I want to add is that it's really about that member experience, right? What is going to provide, what technology, what process, and Brian put together a fantastic process, right? That they know the who or how, right? That the connect with someone, but it's how can we leverage this technology not to surpass our goals, but and using Brian and Michelle as an example, it is how can we provide that member experience to where they continue to rely on the individual credit union for their business, right? Whether it's a mortgage, purchase, refinance, home equity. I think that's really part of it. And I think that is where they're both getting at, is let's provide that fantastic experience, and they'll always come back to us, right? We'll be part of the family, right? And I think that's key. And I loved hearing what they had to say.
Yeah. And look, and when you create an experience, people remember experiences. Okay. They do. They may not even remember the content of your conversation a year from now, but they will remember the experience that they had in engaging with you. And so that is important, and leveraging technology to give your people the time to make experiences, right? Because if they're frustrated and if your team is frustrated and trying to find opportunities, how to talk to them, what to say, when to say, they're going to reflect that frustration on the phone. But if you make the ability for your team to operate at full capacity without frustration, then they can create better experiences, which are simply great conversations, right? Engaging conversations based on information. And so, Brian, we spend time talking about doing this presentation for this audience. And in our conversation, you said something that I wrote down, and I had to share with everyone, because if there is anything you're going to take away from this call today, okay, you've already seen a couple of things on how to set goals, based on the direction of where you want to get to and how to support those goals. But this is something you should have up on a wall that you look at and think about every single day. So we will copy and paste this into and put it into the chat, so you can copy and paste it for yourself, or you can type it up. But I'm going to read it out loud in case you're not by a computer and you're not seeing this. The question Brian asks is, how can we use technology to connect our members to the right person in our organization? That is a question that should be on the walls of every office, which nobody's in the office anymore, so it's not going to get any views. That should be a screensaver for all of you, a background on your computer, on your laptops. It should be part of every conversation you have with your team, is ask this question. This is so important. And if you can keep this top of mind, you can start to organize your goals and your technologies and your processes and your systems to accomplish that, because that is very important. The right person, this is a key phrase. You can highlight right person. That is very, very important. There's oftentimes our members end up talking to someone that's not the right person. And the right person is the key piece of that statement, right? First of all, it's the thought. Second of all, it's that right person. Just anyone is not always going to work. Now, look, if you don't have a human body at all, anyone will be better than nobody. But the right person is going to make an impact. Michelle, I know Brian said this, but do you think about this too at your organization?
Oh, all the time. Yeah, it's part of my world. It's part of how I work every day. If there's a problem, how can I use technology to solve that problem? And then also absolutely, how am I connecting the members to the right people so they don't get transferred multiple times or they don't get the right answers? And it's, we're not there yet. We still have some work to do, as we've discussed already that we've gone through a lot of digital change over the last 2.5, 3 years, and we still have quite a bit more to do. So we haven't solved for that quite yet.
But
we're
the
trying.
the fact that it's on your mind and it's something you think about, and Michelle and Brian, I have to assume as long as you're in the industry, you're going to be asking yourself this question. Even with the best tech, you're still going to be wondering, how do I get my customer, my member, to the right person at the right time so they have a relevant conversation? And so kudos to you guys. That's what it takes to be the best at what you do and really care. Right? This is a caring question. This isn't I need to, make sure my bottom line looks a certain way. This is forward thinking. This is thinking, hey, if I can take care of my customer, the bottom line is going to take care of itself. Right. And that's important. And so look, you also, Michelle, had something really, really important to say. And I also documented it. And remember, I said I was going to do this, and I'm going to repeat it for everyone. If you're going to take notes, this is the second note to take, right? If you haven't taken anything yet, which you should have, there's already been great content put out there and great insight as to what you guys should be thinking about. But look at this statement, or it's a quote and a question at the same time. How can we get our members during the early stages of their home buying or refinancing process? This is such a powerful question. Okay, look at if you break down the question isn't, we've all heard the concept of speed to lead. We all heard we need to get to the customer first. We need to get to the customer first. But when you hear the word lead, it means the person already raised their hand. This statement, Michelle, says to me that you want to get there for the early stages, not the decision-making stages, but the early stages where they're thinking about it, where there's some intelligence, some insights that say this person could benefit from a sounding board. What this is available to you. What's on your mind? How have you been thinking about this? What are you going to do in the next 6 months? Right? That's what I hear when I see this question. What do you, when you said this the other day, what were you thinking about? What do you think about regularly?
Exactly what I said. How do we accomplish that? That's very often with the home buying process, they're thinking of their lender after the fact, after they've talked to their realtor, and that's too late. They should be talking to their financial advisors and their lenders in advance so that they can make better financial decisions. And maybe right now is not the time for them to buy. Maybe they do need to refinance. Maybe they need to get a HELOC and do some debt consolidation to improve their credit score. But the earlier we can get to them, the better we're setting them up for success in that process when it is the right time. And really, it's back to what Brian had commented earlier. It's all about data. We have a ton of data on our members, and identifying the trends and when they're going to be ready for those next transactions early. We can use the data to do that.
And look, it's so important for you all to get to the member before the agent does, or at worst at the same time, because the agent isn't aware of all the programs you have available.
Right.
They don't. So they're just going to be like, all right, well, let's get you into a house, and they're going to ask some basic information, but may not be able to offer the best guidance. And you may find a situation where somebody should be talking to you first about a refinance and then a purchase, right? Potentially that should maybe be the order. Maybe it's a 6-month process. Let's do a cash out. Let's get you the money you need to do a little bit of updates on your house so you can maximize the sale, and then use the income from that to buy the house that you really want and not settle anymore, right? That's not a conversation an agent will have. They're going to say, buy the house, buy this one. This is the one you want right now. And so getting to them early is so important, so you can at least give them some of that guidance that agents just don't have. And there's nothing wrong with agents talking to the customer. It's just sequencing is important, right? And out of sequence may mean that somebody doesn't take action or takes the wrong action, and then there's some resentment or not as happy of a member or a customer across the board. And so I love that you guys are thinking about this, and highly recommend everyone constantly think about how you get to the customer before they get to the market to make a decision. Peter, you look like you're itching to say something.
I do. I'm dancing here trying to talk. I love this question, and the way Michelle frames it up is that this is something that the credit union industry as a whole seems to struggle with, and it's refinancing is one thing, right? Yes, cash out refinances could come back. Home equity, yes, or is going strong. But let's focus on home buying, right? It's the idea of let's be more proactive versus reactive, right? The reason I don't want to speculate, nor do I want to make assumptions, but right now, again, the capture rate for our membership on average is about 2.5 to 3%, and that's because we live in a reactive world. We're hoping that the membership comes to us for their refinance, for their home buying, but meanwhile, they're going out and looking at homes, and we're just not aware of it. Right? They're going out and having their credit pulled by someone else, and we're just not aware of it. Or we're not in tune enough with what our members' needs are and our members' wants, that we never know if they buy a house, right? And so the question is, how can we leverage technology to help us be a little bit more proactive in what we do, to continue to be part of the conversation? And I think that's all we really want to be, is be part of the conversation with our members. Whether that's through something as simple as a home buying seminar, and I think that's a fundamental thing that we should be doing as mortgage lenders. But it is also using the technology that we have and that's out there on the market to be more proactive in part of that. Because Brian, if I remember correctly, Detroit, Michelle, Denver area, DC area, a realtor would not speak with a member or a home buyer until they actually have a pre-approval, right? Okay, so how do we be part of that conversation where we're able to issue that pre-approval before they're even talking to a realtor? That is part of the overall question. Being more proactive, issuing that pre-approval early on in the process. Because I guarantee, if we have the pre-approval in their hand, they're going to come back to that credit union. I think that's a big part of it, right? Being there early, right?
Right, and the confidence you get as a home buyer. Hey, I'm already pre-approved. I got this, and not only am I pre-approved, but I'm pre-approved for a program that's best for me. Because I could find a house and find out that there's not the best program, the best loan options for this house. I have to do something unique or different. And so what you're saying, Peter, is you're also giving the confidence to the member that is going to make a great decision because of that pre-approval and because of the conversation they've had with Brian or Michelle, your teams, right? Or everyone that's listening, your teams, they have a little bit of confidence there. So I love that framing. And if Michelle or Brian, if you have anything to add, please throw it in there.
Let me just jump in real quick. And one thing I'm gonna clue everyone in on. This was really successful when I was out in the New York space. Is people talk about relationships, and I always heard, well, they go to their realtor and they steer them in a direction, and a lot of times that is correct. And so to Peter's point, we want to be there first. But I tried to really figure out how we could crack the code on realtors, and there are realtors out there who have been in the business for 20 years and they do a great job and they already have their relationships built. So one thing that we did is we started reaching out to those community colleges and programs that were offering a real estate license. And we started talking to the instructors. And we were actually able to get into some of those classrooms and have conversations with people who were learning to be a realtor. And so we were establishing the relationship with the realtor before they had their license. And so imagine now they come out of school and they have this brand new license and they're listing a house, or they're talking to a buyer, and they already have a credit union that they can go to and trust because we were there for them early in their career. So it pays off right away, but I cannot wait to see what happens in 5, 10, 15 years when those realtors are really taking off.
Yes.
So if you can do that, if you can find that program and they'll let you in the door, it's a great way to start building relationships right away with realtors.
But
That's a
I'm not
great-
in the mortgage
great
lending
nugget.
division or mortgage lending anymore, but I wrote that down. That's a key point. That's awesome.
Yeah.
It was huge, and it just came out of a brainstorming session, and I kept hearing the same excuse from my team. And my team, no matter where I've worked, and I've worked throughout the country at several credit unions, my rule is if you're going to tell me that's the way we've always done it, don't even say those words and just smile at me because I don't want to hear it. We need to think outside the box. And so I finally just said, hey, my friend's daughter is going to school. This was in Ohio. Unfortunately, I was in the New York space at the time, but my friend's daughter is going to school to be a realtor. I wonder if anyone's ever talked to her. And so I reached out and asked her, and she said, no bank or credit union's been in there. And so what happens is they graduate, they have their license, they go to their, broker, and the person that's training them says, here's who I use. And it just keeps funneling that way for the rest of their career. So step outside your box a little bit and try something a little bit different.
And you're giving back to the community by doing that. You're actually
Absolutely.
helping that realtor. I mean, it's again, the confidence you're giving that realtor, knowing that they have a great credit union that will support them and will help them and will help guide their customers. And you probably helped close more deals for that realtor than the realtor even knows, or all those realtors, because on their own, they would have struggled through it. They would have had some stumbling blocks, but then they have a partner and now they're more confident they can speak to their customers. I think that's brilliant. So make sure everyone wrote that down. And look, we now want you all to get involved. You've been listening to us. You've been hearing our voices. Hopefully you've been looking at the screen too, because the questions also pop up on screen. But now we really need you to look at the screen because we have a poll coming up. Okay. For those of you that are still looking away, let me read the poll and then come in here and answer it for us. It's just a yes or no, a little binary question. Are you certain that your technology partners are helping you achieve the goals you set? Like 100% certain? What does this mean? It means you need to understand the difference, and please answer the question. I'll keep sort of describing what we're talking about here. It means you need to ask yourself a question. Do I have a vendor or do I have a partner? The difference is clear. A vendor gives you what you want. A partner gives you what you need. And if you need to hit your goals, you need a partner to help you hit your goals. If you just want somebody to say yes to you, find a vendor and they will give you everything you're asking for. Okay. And so are you certain that your partners are out there, your technology partners are helping you achieve the goals that you've set? Do your partners even know the goals that you've set? Do they understand what you're trying to achieve? Right? Let's see what this poll answer is going to be. And be honest with us, guys. This conversation gets really, really good and powerful if we're getting honesty. So, no judging here. We're just looking. No. Okay. Look, one of you said, yes, I think they know. And I love that. And whoever that one is, if you want to write down who your partners are in the chat for everyone to see, seriously, if your partners are that good, we should all know who they are. So why don't you put them in the chat and everyone can check out those companies that are great partners to you. And for the 8 of you that said no, and we didn't get all the participation. So hopefully for the next poll, we'll have a little bit more participation. So 89% of you said no. This is very important. For you to have a successful 2022, you must have your partners understand your goals and show you how they're going to support them. If they can't, this is important too. If they can't support your goals, start to look for other partners. It's okay, right? It's okay to make a change, but your partners need to support you. Technology companies are not here to sell you a contract. They're here to help you achieve your goals. That's the only reason you should be signing up with any technology. If that's not the reason you're signing up with them, what is the reason, right? And so this is why we ask this question, is because so many don't think their current partners are going to help them achieve their goals, and they should. Lovely. Thank you so much, Zane. Appreciate that. You guys take a look at that list. There are 3 partners right there that are going to be helping you achieve your goals. And you should all be saying that. Michelle, Brian, anyone want to speak up? Like, how important is it for you to be aligned with your partners on the goals you're trying to achieve?
Yeah, I can start, Michelle.
Go ahead.
To me, it's very, very important. In fact, it's vital to the success of the organization. And again, I've been doing this for a little over 2 decades now. And I would say even today, I would have to answer this question as no. And I think that's because if I'm looking at all of my systems honestly, they're just not performing the way I want them to exactly. And a lot of that is on us. And when we're doing the setup process, as you were talking about, Alex.
Yep.
When a partner comes in or a potential partner comes in and they're looking to sell you a product, you are going to see all the bells and whistles and all the, glitz and glamour of it all. And it looks great. However, what I always like to do now is provide them some of our actual data. Obviously, after you sign an NDA, and have them show me exactly what they're going to bring to the table.
Love it.
I will be honest with you. I had a fintech reach out to me a couple of months ago. I won't, share the name, and it was great, and I think they have a great product. However, when I gave them my data to kind of look through and see what they could possibly do for us, we both looked at the answers and came to the conclusion that it probably wasn't the right path for either one of us to go down. We would not have achieved that through just a normal process of signing the vendor up and then sending the data later. Let them show you exactly what they can do for you. The other thing too is make sure when you're looking at an agreement, and get your attorneys involved and get cross-functional teams involved and put in the right SLAs. We need to make sure that you have all those in place so that when something does go wrong, you can reach out to that partner and say, hey, this isn't working quite right. We need you to fix it. And they will. The other thing I said in kind of our practice round, as we were going through and we were kind of looking at the questions and how we wanted to address some of these questions and concerns today is, I said too, I do not want to sit down and go to lunch and hear a sales pitch all the time. I want to be able to form those relationships. To me, that is important so that I know that when something does go wrong, or even when something is going extremely right, that I can pick up the phone and call the vendor and either thank them or let them know that I'm not happy. But I have that comfort level, right? So I am sure that we get inundated with phone calls and sales pitches and LinkedIn requests and all sorts of crazy things that, we start looking at. And when you're in an RFP process, it's really easy to look at all the bells and whistles, but make sure you're digging through and make sure you're holding that vendor accountable.
It's so important what you're saying, Michelle. Anything to add here, and then I'll add some color maybe after Peter goes.
In addition to SLAs, I would make sure that anything that was in your RFP that is also in your contracting agreement, that's in writing. So, because what you're expecting is what you saw in the demos and what you saw in your RFP document, make sure that that's all documented there. And, as far as, partner versus vendor, I've always approached those relationships in that way, because there's knowledge and experience that I can share with those partners to improve their product as well. And then, but I also feel that it's really important that they understand what my goals are, and so they can help me get there. And maybe they don't have the technology, they don't have all of the I guess easy buttons for me, because I'm very, if this and that, you should be able to do this, right? Not always. It's always a little bit more difficult than what my brain thinks it is. But if they're willing to come back and say, yeah, we can't do it that way, but we can do this. All right, can I still achieve my goal? Yes, then you're a good partner for me to work with.
But what's important, and Peter, I want to hear your thoughts on this. What's important for everyone to pick up from what Brian and Michelle are saying is they're having conversations with their partners. They're not talking about just what is on the contract. They're actually having conversations about their goals. Remember how we're going to tie this all back. The very first question was about goals. We're bringing it right back to this part of the conversation. Their goals are aligned with the conversations they're having with their partners. And Brian is saying, this is why this is such a brilliant conversation, is Brian is, again, being vulnerable and saying that, look, there's some partners right now we have in place that we're not so happy with, but he's not blind to it. He's conscious about it. And again, the real key takeaway that I'm hearing here, and Peter, I want to hear your thoughts on this, is you, Michelle, and you, Brian, are actually sharing your goals with your partners, and you're going, hey, how can you help me? And then Michelle went above and beyond and said, if I help this technology get even better, my results get better, and I get to help somebody do something better for themselves and their other customers. So you want to help your partners the same way, right? Like that's the point of a partnership. Peter, what are your thoughts?
Well, I mean, a couple. I mean, I'm not surprised by the results of the poll. I'm really not. I mean, that's been a theme in all my conversations with credit unions across the country. But I think it is having a partner that is actually open to have the conversations like Brian and Michelle have outlined is key to your success, right? If they're not open to having that conversation of, hey, this is what we need, this is what we want, how can we work together? If they're not open to that, if they walk into that room and say, hey, we are ABC Tech and we are the best and the biggest out there in the market, but if they're not willing to, be true partners, they're not worth your time. Just let them walk out the door, be done with that 10-second introduction. And I think that's part of it, right? You have to have a true partner. And I love that we have that word up there, because it's something that even when I, in a past life, that's something we focused on. And if they weren't willing to have the conversations with us, we did our best not to partner with them. And I love that this conversation. It's fantastic.
And look, this is, again, you're hearing, everyone in the audience, you're hearing from the panel here how important it is to have dialogue, right? Not just take a sales pitch, not just get a presentation, not just read a contract, not just sign a contract, not just put them through compliance, not just put them through legal, but actually have a conversation about your business and how they're going to help you with your business. And in hearing that, maybe you can help them with their business. I'll give you an example of a partnership, and I can give it from my perspective because I experienced it. The way the market is going, not everyone has had the ability to shift and prepare and get their teams aligned with the next direction that they're heading into this year. And so a great partnership, I'll give you an example. I had a call from a lender that we've been working with almost over 2 years now. And they called and because of the relationship, because of we know where they are, they're more consumer direct driven. They have a small retail team that they've put into place as well, but they're more consumer direct. They reached out and they said, look, frankly, we just need a little bit of support for the next few months. Can you guys just give us some leniency on price for the few months? We're hiring some new folks that are more prepared for this type of market. And we don't want to shut anything down. We need these alerts. We need this opportunity, but we just need to save a few bucks for the next few months. Can you do that? Guess what? Absolutely. Without a question, without a doubt, we're helping our lender make the right decisions, hire the right people, save a little bit of money so they can do the right recruitment. And we are willing to do that. That is a partnership. That is not someone that says, hey, we have a contract. Okay. You pay this. Good luck with your business, buddy. That's not a partnership. So what Brian is saying, that's right. Flexibility is key, but it's more than flexibility. It's having the awareness of what your customer is going through. And in my case, I trust that the lender was being honest and wasn't just trying to save a few bucks for fun, but this is really what they needed to help their business. And guess what we did? Besides saving them some money on the contract, we implemented, because here's my suggestion for everyone, isn't always to cut money. It's to get more out of your process, more out of your programs, get more out of what you're doing rather than saving a few dollars. But we're doing both for them, saving a few dollars and putting processes in place to maximize all of these opportunities, retraining, rescripting, realigning settings, removing some records to put healthier records in that are more relevant now. Like all of these things, because we have a relationship and we're focused on their goals. If we were selfish, and this is important, if we were selfish, we'd be like, look, you have a contract. Good luck. You should have run your business better. That's not a good partner. So Peter was just saying, walk away, just walk away, right? No, don't look back, just walk away. Don't do that backward glance. Don't do that. Just keep walking. And that's the kind of partnerships you want. Look, we're going to have another, and let me pull up another poll here real quick. Where is my, here we go. Oh, question first, then another poll. Unless, yep. Did I go back? Yes. Okay. So, and guys, there is another poll coming. So pay close attention. We're going to need your thoughts there. Question for you guys. This is, and this is why I love this panel, because you've already shown the vulnerability. So this is great. What do you really do well? Michelle, we'll start with you. What do you really do well? And where could you do better with technology?
So one of the first things that I did when I joined Westerra just over 2.5 years ago, going on 3 years soon, is identified that we need to have a better point of sale experience for our members. So that experience is fantastic. Now we have a new LOS, new point of sale. They have everything that they need in one place. They can shop. They can apply, they can upload their documents, they can see their status. Everything is, simplified and all in one area rather than being all disjointed. And, really that's a foundational component, is to have that in place, because you can work on getting, leads and putting them on journeys and marketing and all of that stuff. But if they get to you and that experience is disjointed and hard, you're going to lose that opportunity. So that's what we've done really, really well at. You can apply and be done in 10 minutes, and or you can stop at any point in the process and say submit. I don't want to give you any more information. I want someone to call me. So that's fantastic as well. So where we could improve is use of our data. We have a lot of things that are going on right now. As I've mentioned before, we're going through a digital transformation as an organization with CRMs, MRMs, working on APIs, a new online banking. And so, org-wide, we have a lot going on. We're working on using our data better. We have, that stuff's in the works, but it's just not complete yet. And just because our BI team and our dev team, they're on every project that we have going right now. So there's only, so many hours in the day for them. So we're getting there, but that's where we're not really falling down right now, but where we need to improve.
Yeah. And you're making progress. I mean, this is one of the reasons we're in a relationship together now, is to help with that data. And look at, again, as you guys know, I like to break, unpack what was just said. And the thing that I think you said that was very important for everyone to write down or remember is that, hey, you can create a great experience and make somebody come to your store. But if your store doors don't open properly, they're broken, they're cracked, you get inside and the cashier is using the old fashioned, I got to scan your card and give me a minute, it's got to connect to the internet on dial up, it could take 5 minutes to check out. That person's probably not coming back and they may just leave the cart and just leave, right? And so what Michelle identified very quickly is we can get members to maybe engage with us, but while they're engaging with the process, if the process is faulty, they're not going to stay with us. They're not going to enjoy the experience, right? And so just identifying those areas of where you can. And so what Michelle is doing, she's fixing this, and then she knows it's in a good place, and then she's going to look at the next crack in the road. Where can we make this smoother? And then the next, and then the next, and then she's going to revisit and then do it all over again. And so it's really cool how you just described that I can get you to come to it, but if it's clunky or doesn't work, we may not get a deal anyway. We spent all that money on marketing and advertising and technology, and then they don't do anything because our storefront is not working well. So I really like how you just described that. Brian, for you, what do you do really well? What do you crush, and where could you do better?
Well, I think I'm going to answer this question maybe a little bit differently than you think. And I apologize if I go off the rails here a little bit. But, I'm with Michelle. We have some great technology in place, but I think here's where we miss the boat. And I think a lot of people do this, at least I'm guesstimating, that we miss generational differences. Generations use technology so very different. And I have twin 14-year-old boys. We've had this conversation amongst the panelists here before, but I'm gonna use it in this experience. I think I'm pretty darn good with technology, but when I get frustrated at something on my iPhone, if I hand it to one of my 14-year-olds, they have it fixed before I know what they even did. And the same is true if my dad's having an issue, he can give it to me, and typically I can figure it out. So, and that differs. And so what we've done internally here is we've had this conversation with employees that we are talking about generational differences in how they communicate and how they use technology, and so that we can understand that better. And so then when we go out to our membership and we say, well, we've got all the technology in the world, what are you talking about? And they struggle with it, we can walk them through it, or at least help them. Or back to Michelle's point, when they're just done and they don't want to do it anymore, they can talk to someone. And that's where I go back to my original conversation of be there when they need you, but give them the tools that they can do it on their own, because there are people at all spectrums of that. But I think you really have to understand generational differences as well. It's an interesting study to do, even with internal communication.
That's a great point. If you're active in chat here, put your thoughts in there. Generational differences. Are you aware of the generational differences that exist in two places, by the way, on your team and the customer? Right? If there's a disjointed thing here where I'm a millennial and I want to do everything technically, and you're a little bit old fashioned where you want to be hands on, write things down, interview me, there may be a clash. And it's like, hey, understanding those two different things and being able to offer both options is so important. I really like how you frame that. Peter, before you jump in, or I see your Antsy again, I'm going to share. Peter's got lots of energy like me.
I do.
I see myself in the video there, Peter, and you're like me. We're doing little dances every 5 minutes. We got to move around.
And I've been trying to behave with my hands. See? You guys are all moving around.
My hands are in my pockets.
Mine too, Michelle.
I'm trying.
Oh, you're good. You guys are very, very disciplined. I'm very proud. I'll tell you guys something interesting talking about generational differences. We just did an event with experience.com where there were some studies done about millennials and the new generation and how they like to make decisions. So I'm going to give everybody a golden nugget here, specifically because you just reminded me of generational differences. If you want to be ultra successful with millennials and the Gen Zs, these people like to make decisions in groups. So look, we're doing a webinar, right? We have lots of people on this call. We're educating you. You're learning something. You're going to reach out to Michelle and Brian and Peter and us, and you're going to learn more. You're in a group environment. People are asking questions. You're learning. What we found, not from Alex doing this, but interviewing, we literally had millennials on the webinar with us, and we were asking them this questions, unscripted. This was fantastic. They said they love making buying decisions in groups, but not in groups of them and their parents or something. No, in groups of peers. So if you want to start seeing explosive numbers, start doing B2C webinars, 10 minutes of content, 15 minutes of answering questions. And you can target using, so Michelle, this is for you, using notifications from Sales Boomerang. Let's say you got 12 credit improvement alerts and it's all in the same region. Instead of calling each one individually, hey, there's 12 of you today had a similar experience. We'd like to share with you the value you can experience, each of you. And you do this in a group. They ask questions, you hang up, and it's such a cool thing. And they feel, here was the reason they said they like to do this. So this is a big nugget for everyone. They feel safe. That was the answer. They feel safe in a group, that they're not being targeted to be sold something. They're like, you can't sell me. You have to talk to the group. And then I can see what's happening. And then I can make a decision based on the questions being asked. So a really cool thing, and this is to your point, Brian, generationally, oh, I want to get it with a customer one-on-one. You may say to a customer, look, if you have other friends, maybe they have similar questions. I'm doing a 10-minute webinar. It's fast. It's just covering this thing about equity and how millennials can take advantage of equity. I'm just making something up. You can say it for anyone. How married, families of 4+ should be taking care of their equity more than anyone else because you have to take care of whatever it is. You can bring people on in groups, and you'll be shocked at how many people then reach out and say, you know what? I really like what you were talking about here. Can I learn more about your programs? So this is going into the generational differences and how to use the market to talk to all. Peter, anything you want to add before we go to the next?
No, I think, in a nutshell, it's credit unions as a whole do this extremely well. And it is knowing their members, right? I can't tell you how many credit unions I belong to or I've walked into being part of a credit union in a past life where an MSR could tell you everything about one of their members, right? We know, we want to talk about, mining data. Well, what about the actual knowledge that our staff has about our members, right? We don't do that enough. And so the question is, okay, well, how can we mine the information that we have? And that, yes, Michelle, you called it a MRM. How can that information get into our MRM, right? Or the CRM for credit unions? But also, how can we leverage that in the technology that we have, like a Sales Boomerang or something like that, right? I think that's, as a credit union industry as a whole, that's what we really need to focus on. We already have the knowledge. How can we better leverage that with the technology that's out there?
Yeah, look, there should be no excuse anymore for saying, I don't know what's happening with my customers, right? Literally commercial grade, best fintech in the world type of technology that's been designed specifically to help you guys be on the same level playing field as the better.coms of the world, the rockets of the world that have data science armies spending tens of millions of dollars figuring this out. You now have that available to you off the shelf, already tuned up to get you the results that you want.
Well, not just that. Sorry to cut you off.
It's okay.
You're missing a key point. You have the knowledge of a branch manager at your disposal, right? You ask any great branch manager from a credit union, they will tell you about every single member that walks in there that's a regular, right?
Yes.
I will take them better. I'll take them over, most CRMs because they know everything, right? They really do.
I love that.
That's our niche, right? That's what we do. That's what the credit union industry is built on, that relationship building. And okay, well, how can we take that knowledge, that strength, and really put a technology spin on it and help allow technology to make that easier?
Peter, you take somebody like that knows the member inside and out, and you give them the insight about any specific member, and that person will absolutely make the member feel like gold, right? They're going to be like, oh my goodness, thank you. You know me and you're giving me this extra value. That is what we're talking about here. That is why this entire panel was put together, was to talk about it, supercharging your production team, supercharging them to do what they do best. And by the way, the credit union concept model is the greatest financial model in the country. Just so as everybody on the call is clear about this, it is the greatest model of all financial models out there, because you're doing it for the members. You're not doing it for yourselves. And everyone, and it's everyone I've ever met from the credit union space, has this big heart that they put into their work. So it's the best model, not just because of the model itself of the business model, but also the type of people that work in it. So there's no reason why only 3% of the market should be credit unions. It should be more like 33 or 43 or 53%, right? Like that's what should be happening. And that's why we're here. And that's why we're so passionate, why Brian, Michelle, and Peter are so passionate. I'm so passionate about putting these on for you guys so that we can let you know there's no excuses, right? The technology exists, the process exists, the systems are here. And I'm scrolling through this quickly, guys, because we have only a few minutes left. And I want to get to where people can see some of your contact information in case they want to connect with you and take any Q&A that we may have right now, or any closing remarks, because remember, we talked about this. We said, if we get into some passionate discussions, let's just go with it. If we don't cover some of the questions, that's okay. And so let's go down the line. Any last remarks, closing statements? And if there's any questions, throw them in the chat, everyone, even though it's the last minute, throw it in the chat, because one of us can reach out to you with the answers. So if you have a question, throw it in there. We'll get to it. Michelle, any closing thoughts?
One of the things I was going to talk about in one of the other questions is that there is this old poll that I keep on going back to. It's probably from like 2016 or so. So it is a little bit dated, but it sticks with me. And that is that realtors refer to loan officers. 45% is due to the relationship. It's not product. It's not, so that's the number one takeaway. And then another part of that was around service, and 60% was the responsiveness and speed. And so that's what we're trying to achieve in both of those areas, between relationship and responsiveness, using technology.
Love it. Thank you. What a great closing statement, Brian.
Yeah, one thing that I've always wondered internally, and always ask employees when I work at a credit union is, are you using our products and services? And if so, why? If so, why? And if not, why? And what you'll find is you'll find a lot of things out. Now, some people will tell you they don't want anyone knowing their business, things like that. But sometimes they will just be very bluntly honest with you. And if we're not servicing our coworkers properly, my guess is we're not 100% out there with our membership. So kind of use that as a tool. When a fellow employee or coworker is applying for a loan or working through a process, are you in and helping them 100%, or are you giving it 75%? Because if you are giving it 75%, my guess is when a member needs help, you're giving it less than 100 as well. So just use that as kind of you as you work with your employees and different originators. But I love what Michelle said about realtors. You have to figure that piece out, but we have to use the technology and everything else that we have to be first in mind. I will close with this. And Alex, you said Rocket Mortgage. It just reminded me of this. If you actually ask a bunch of people if they've heard of Rocket Mortgage, they're all going to say yes. And my guess is a lot of them have used it. If you ask realtors what they think of Rocket Mortgage, most of them hate it. And there's a reason, because they're not focused on the relationship. You are just a number and they're getting you through the pipeline. They have great technology, but they're not building that relationship with you. You don't know the mortgage loan originator. You don't get, it's hard to talk to. You're leaving a voicemail. You're getting an email saying, schedule a time to talk with me. There's a reason that you hear about it, because they have a lot of money behind them and they can do a lot of advertising, but they're not what's best for our membership, and they're not what's best for people. And so build those relationships and understand that this takes time, but really set the tone to do that.
I think, Brian, this is for you. First of all, everything you said is so on point. And I believe you now have to start either a daily or a weekly blog where it's going to be Waldron's Words of Wisdom. I need that in my life, Brian. I need that. I think we all need that in our life. The way you deliver your words of wisdom, it's captivating. Peter, how can we wrap this up and give everyone on this call a super special nugget here?
I know we're over our hour, but I want to say one. Alex, thank you. This was fantastic. One, thank you for putting this on. And thank you for supporting ACUMA, but also, thank you for everything that you said about the credit union industry. Without partners like you, the credit union industry wouldn't be as successful as we are, right? And I think the final piece of that nugget is, and this will, I'll give a little sales pitch for Sales Boomerang. In a past life, I brought on Sales Boomerang because I realized that, that in order for my credit union to be successful, it's because we have to start forming that membership for life, right? That relationship through every life cycle. And in order for us to do that, we need to have a technology platform like a Sales Boomerang, or just have it be Sales Boomerang. And I think that is the ultimate goal for every credit union, is that we want to be their credit union for life, right? And we want to ensure that we are there for every part of their life cycle. And the only way for us to know that is to have partners like you. And so again, thank you.
Thank you.
I do appreciate that. Everything that you've done, this today, but also your support for our industry.
Thank you so much, Peter. Thank you so much. And look, and what you all have said, it really, this is why I wear the shirt that I wear that says financial friends. What you're describing, Brian, what you're describing, Michelle, what you're describing, Peter, is we want to be our members' financial friend. But a friend, and this is very important because Peter said it several times, member for life, member for life. A friend embodies member for life, because a friend is a two-way street. It's not a one-way street, right? They depend on you, you depend on them. It's a relationship. It's a friendship. They can call for advice. You can call to give advice. That is what a friendship is about. And you're a financial friend that can offer financial benefits. So it goes beyond just a friendship. You actually have way more things you can offer in this friendship. And so I am a friend of the credit union space. I love it here. I could not wait to finally be able to service this space. And now that we're here, it just feels having these conversations feels so good, because we're all talking about the thing that we decided to do in this industry, which is help members, help borrowers find a lender that's going to be there for them throughout their journey. We use the word journey, throughout their journey, but not spam them along the way, but actually offer insights, offer value, offer benefits, have strategic conversations, and leave the decision for the consumer, right? Don't force them. The millennials have spoken and the results are clear. 66% of people do not trust any financial institution. That we need to flip that script. Right? We need to flip that script. And it's this group here that's helping do that. And everyone in the audience that's listening, that's taking notes, that can bring this back to their companies, that can help create that. And of course, let's get credit unions higher and higher and higher in the usage in any kind of lending, not just mortgage lending, in all different financial services. And so Brian, Michelle, Peter, thank you so much. Thank you for giving me this platform and sharing your audience with us. Can't wait to do it again. Thanks everyone. Thanks everyone that was on the call. Hopefully you all took some good notes and you can enjoy the rest of your day and put what you learned into action today. One thing, just do one of the things you heard today. Okay. All right, everyone. Thanks again. Have a great
Alex.
day.
Thank you all. Thanks, Alex.
Thank you.
Bye.
Take care.
Bye-bye.